everyone, and welcome to another Edge Capital video podcast. Today, we're exploring what's really beneath the surface of Web3, where the biggest opportunities are, and how capital is being deployed as AI and crypto converge. For those less familiar with Edge Capital, we are a $500 million investment manager focused on sophisticated CeFi and DeFi trading strategies. We actively participate in both on-chain and centralized markets, providing liquidity and managing risk across market cycles. I'm Kalafsky, and I focus on investor relations at Edge Capital. Joining me today, I'm pleased to have Mona Teisler, venture partner at Edge Capital. Before we begin, a quick disclaimer. This video is for informational purposes only. This is not investment advice and not an offer to sell or to purchase any securities. Please refer to the full disclaimer at the end of the video. Mona, thanks for joining us today.
Thank you so much for having me.
So zooming out, where are we in the Web3 cycle today?
So I'll answer this a little bit from a venture capital perspective, and I would argue that we actually went through a very, very aggressive reset cycle within this asset class at this point in time. And in my opinion, this was actually very necessary, right? We have a lot of those tourists that come into the Web3 space. They have now left. And purely narrative-driven, hype-driven projects have faded or are fading out of the market, which means that we're actually left with a much smaller, but much more serious and meaningful cohort of builders that we can look into for investment. And I think, if we look at some of the data, we can really see a reflection of this, because crypto venture deal count is actually down 60%. And, fund formation is at a 5-year low, and 85% of the 2025 tokens are still below launch price at this point, which is similar to, if you were already in the space, to 2018, where, pretty bad market conditions actually caused very, very good vintages, 2019-20, to shine and produce really strong returns. So I think we're in a similar window, but in a very, very different, market cycle, and in terms of very, very different market outlook. And what I mean with that is we're quite, it's different because the institutional layer, the institutional interest, the institutional participation is really no longer theoretical. And we're now actually looking at real interest, real participation, real research, and real investments. On the Bitcoin ETF side, or generally on the ETF side, of course, right? But we're also looking at a lot less retail speculation, but a lot more institutions like pension funds, endowments, wealth managers starting to deploy into this space through more regulated structures. And that's quite exciting, in my opinion, because if we, for example, look at, tokenized real world assets on chain, they've surpassed about 12 billion in March 2026, which is really more than doubling from the 5 billion at the start of 2025, right? So I think we're actually seeing that there is a different type of interest in the digital asset space that brings upon a lot of opportunity. And we're also seeing consolidation with several large M&A deals happening, right? We've seen MasterCard acquiring BVNK. We've seen, Stripe purchasing Bridge. Those are the very well-known ones, but there's a lot of other market consolidation happening as well. And, we're really seeing, I would say, a maturity, a growing up of the market at the moment. And that is exciting, because I think these are early signs of recovery and strong but very selective momentum, not really necessarily looking into a broad bull market, but there is something more structurally long-term forming underneath the surface. And therefore, I think this is quite exciting. And beyond all of that, beyond the institutional foundation, beyond more regulation, beyond more maturity that is, underlying or part of the market, I think there's also another aspect that is impacting the next cycle or even the current cycle, which is the convergence between AI and crypto, or AI and blockchain, which is formulating what I kind of coin, or what we coin, the autonomous economy. And that provides a huge amount of opportunities, I think, that are coming our way from a venture perspective.
In that backdrop, where are the most mispriced opportunities right now?
So if we keep to that topic, maybe, what I think a really underpriced category is actually, and bear with me here, the scarce layer of a very abundant economy. So what does that mean? It means that essentially, if we look at looking at the AI space for a second, intelligence is really commoditizing very fast, right? So if we look at GPT-4, that level capability went from $30 to about 15 cents per million tokens in just under 2 years, right? So this means there's a huge cost reduction in AI, and this acceleration, however, therefore creates some bottlenecks in layers above, right? Because we're starting to become power users. It's starting to become much cheaper, but we are actually starting to realize there are other bottlenecks that are essentially, keeping us in some ways from scaling AI. And I would argue, or we would argue, that, a lot of that falls into 3 categories: trust, capital, and coordination. And essentially, this is infrastructure that the agents cannot build themselves, right? When they become really intelligent, they're actually like building things themselves, or the technology is actually evolving without a lot of human interaction, is what I mean with that. And of course, we also have the giants, right? The OpenAI, the Anthropics, the Googles, the Metas, etc., that are building huge amounts of infrastructure as well. But there's still this area here in, I would say, almost, I describe it in the middle ground, that essentially is a really, really, really exciting opportunity and a mispriced opportunity. When AI scales, there's, in our opinion, a really clear requirement for neutral, independent providers that really sit against these massive incumbent markets and provide, a lot of investment opportunity for us here. And this is also, there is also an opportunity here for like DeFi infrastructure, because it is actually, there's a lot of traction in the decentralized finance space, which I think we haven't actually fully captured yet. And therefore, those 2 areas are really, really interesting to dig into. And there's a lot of opportunity there for us to find venture investments really, really early stage that actually will be category definers and really changing, the economy and the world really as we see it. And that's really, really exciting. So yeah, that would be I think the 2 areas where I would say, let's look at opportunities. I think we're still mispricing the market here. And even though there's a lot of hype and a lot of, overvalued opportunities, I think if you get it right, if you get the infrastructure layer, and if you really understand, what are the bottlenecks that are causing AI maybe not to be able to scale, or agents not to have the infrastructure layers to really, really independently operate, and therefore creating a whole new world, that's where, we should be looking.
So does this feel like an especially attractive vintage?
Now, I think in the market, yes, I think all of the things that I've mentioned, it has it has strong characteristics of an attractive vintage. And what I mean with that is essentially, if we look back to the example I gave at the beginning, if we look at 2018, and then which was, a rough year, and then we look at 2019, it was quite quiet on the surface, but there was a lot of foundational infrastructure being built during that time. And it became really, really critical infrastructure during the next investment cycle. And I think we're in a very similar situation right now. We're in that building of critical infrastructure time frame, which provides unbelievable amounts of opportunity if you've got your eyes, ears open and are really thesis driven. And that also means right now what we're seeing is valuations are much more rational, right? Founder quality is, in my opinion, much higher on average. As an investor, you're not competing with, other 40 term sheets being issued for every seed round that you want to invest in. So you are actually able to do your research, go in with a clear thesis and understand, what is the foundational infrastructure of the next cycle, which, we coin as the autonomous economy that is emerging. And our prediction is actually that, by 2028, this infrastructure layer will start to consolidate. So a very, very strong window for investment into this new era actually is right now. And yes, there is uncertainty, right? And of course, you are really trying to find golden nuggets. But if you find them, and I think we are very, very well equipped to do so, also, given Edge Capital's long-term on-chain dominance and knowledge, as well as extremely strong team, that there's a very clear, opportunity here, and therefore it makes it a very attractive vintage for us.
Let's get specific. Do most tokens actually struggle to capture value long term?
On the token side, honestly, structurally, I would say yes, right? From a token perspective, 100% most tokens had a really tough time in capturing value. And that is essentially because the mechanism by which most tokens so far have been designed is actually that value doesn't really accrue to the underlying, protocol or products. In a lot of ways, it actually is just really poor token design. And governance tokens don't really let you govern anything meaningful. There's, fee tokens don't really have any real buy pressure. Inflationary token rewards don't really hold value over a full cycle. So it's really the way that tokens have been structured so far. Also, of course, in order to not be a security, in order to provide maybe network effects that are thought to be valuable, but as the market has changed and as buyer as well as user, the way that people interact, the way that people use, the way that people see the market has changed. This is something where I would say, really, really, it doesn't work. It just doesn't work. And we need to actually rethink how tokenomics should be structured. And specifically going back to the institutional use cases, going back to, I would say, more broad thinking of how blockchain technology, how AI and blockchain technology together actually build the infrastructure, the base layer for future use cases, for future efficiency creation. That needs to be redone. And I think for us on a venture side, actually investing in equity with token warrants and helping, transform and actually look at how tokens can be structured is really, really interesting. But we need to rethink the overall, capturing of value in tokens, as we need to figure out a way that token ownership is actually genuinely tied to economic participations and the protocols or the project success, rather than just being a speculative asset that essentially, when the liquidity dries up or when retail, focuses on something else, or when there's different interests because the market is in a bear phase, nobody cares about the token anymore, even though the project might actually be generating revenue, getting great partnerships and building something meaningful in the background. We don't see a lot of this being reflected in token prices, and we need to change that. But that means we have to really structurally rethink everything that we know, in my opinion, on the token side.
So how are you personally thinking about capital allocation right now?
Yeah, it's a good question, and I think generally, I'll go back to the slightly buzzwordy, but I think really, if you think about a very, very valuable thesis, which is really investing where abundance creates some sort of scarcity. And as mentioned, intelligence is becoming abundant and cheap. And therefore, there's an infrastructure layer based on trust capital coordinations that is becoming very, very interesting to invest at. And it depends on how, but it also depends on what. And essentially, it's a very, very exciting time to start looking at investing, because I'm not saying the market is in distress, but I think the market is in a position of reset. And I think at this point, we really have the opportunity to speak to founders, to really deep dive into the technical aspects. We can understand the dynamics of the teams. We can understand the dynamics of the ecosystems they're building in. We can understand the dynamics of what we think the future will look like, right? And what infrastructure actually needs to be built for different types of actors coming into the market, to being able to transact, to being able to generate value. And so that is a very, very exciting time. And given, again, that Edge Capital actually operates really at the core of on-chain finance, working with over 150, live protocols. We have very strong operator access, knowledge. We also have strong research capabilities into the AI space, into the autonomous economy space. We have a long-standing venture investment track record and knowledge, and we have really, really strong partnerships across different infrastructure providers, as well as go-to-market experts, as well as other funds and partners that we closely work with to find those golden nuggets in the market. And therefore, I think this is an extremely, extremely exciting time to find those particular investment opportunities that are actually going to be category defining of the future. So we are definitely allocating, we are definitely looking, but we're also spending a lot of time with founders and with research to go into this new foundational infrastructure time with a clear thesis-driven approach. So it's an exciting time to sum it up.
Absolutely. I want to thank you for sharing your valuable insights, and I appreciate your time today.
Thank you so much for having me. I appreciate it.
Of course.